if we look at the start of January in 2024 up to this high, realize we've still got a month. Gold gained 29%, $646. But as I said, I believe that the actual rally began in October. And so you had here 12.27%, 244 plus 646. So you've got $900 in this area. And so far, we have given back roughly 6.65% at current pricing. Of course, if we take it to where this low was, but it's not there now, we were down 9% from there. Now, what was that based on? It was based on central banks accumulating. It was based on inflation. It was based on geopolitical conflicts.
Since October 2023, gold has seen significant gains driven by central bank accumulation, inflation concerns, and geopolitical tensions. From January 2024 to its recent high, gold rose 29%, adding $646 in value. The rally began in October and saw a total gain of around 12.27%, $244, before January. Despite a recent pullback of 6.65% from its peak, gold remains up overall, reflecting strong momentum supported by these key factors. Gary Wagner is a seasoned technical analyst and expert in precious metals, particularly gold and silver. He points out that several key factors, including geopolitical tensions, inflation, and central bank policies, influence gold prices. With no signs of geopolitical de-escalation, these conflicts support a bullish outlook for gold. Although inflation has declined, central banks adjust interest rates, which could benefit gold. Since gold yields no interest, lower rates make other assets like bonds less attractive, potentially shifting more investor interest toward gold. The Federal Reserve is expected to implement rate cuts, possibly reducing rates to 3.5% by mid-2024, creating further support for gold. On the other hand, the strength of the US dollar is often viewed through comparison to other currencies rather than its domestic purchasing power. While the dollar may appear strong globally, its value is diminishing due to inflation. Rising tariffs, particularly those promised by Trump on countries like China, Canada, and Mexico, could further inflate prices, reducing the dollar's purchasing power domestically. This scenario highlights the growing disconnect between currency strength and everyday affordability, emphasizing the need to focus on real purchasing power rather than international currency comparisons. Subscribe and turn on the notification bell to stay updated with our latest content. Share your thoughts in the comments. We'd love to hear from you.
The thing is, we don't see a de-escalation there. So if those are one of the primary factors that move gold higher and they're still in play, I would expect that to create bullish undertones. The next thing is inflation. Inflation has been coming down. And as it comes down, there's a standard correlation. Higher inflation leads to higher gold and the reverse. But what's going on now is central bank interest rate normalization, because gold doesn't yield as an asset. It doesn't yield any percentage of return. As interest rates move down, it makes bonds, securities, and things like that less attractive because the yields are going down. So I expect the Fed to do a 0.25% rate cut this year or in December. That would be a total of 1%. Their goal is to take current Fed funds rates to 3.5%. And I believe they'll get there by, could be the second quarter of next year down to the third quarter. Lower interest rates are going to be a bullish undertone for gold. And so the bottom line is, the last thing is Trump. We know what happened last time he was a president, and we know what he's on record saying. He seems to be pretty true to his word, maybe not to the statements he makes sometimes, but if he says he's going to do something, typically we've seen him actually do that. And he's committed to tariffs, not only in Canada and Mexico, which is a new one, but to increase the tariffs in China. Now, what does that mean? If tariffs are 25% and I'm buying a toothbrush from China that's $1, I now pay $1.25. If that isn't the definition of inflation, I don't know what is. Tariffs will create tremendous amount of inflation. He also created more debt for the country. He's not alone in that by any means. That kind of seems to be the standard practice of almost every president that since I've been around and alive and followed, debt has been accumulating. And so what that does is it plays against the currencies, and the dollar in particular is sensitive to what we do, but the euro is sensitive to the European countries in the Eurozone. So when we see the fluctuation in the dollar and we look at a dollar chart,
been resilient.
we're looking
at yeah.
The resilience that you're looking at is in the relationship to other currencies.
Mm-hmm.
The dollar this year bought much less than last year, and last year bought much less than the year before. In other words, the value of the dollar, when we look at these charts, we're just comparing them to other currencies. We're not comparing them to the buying power of the dollar.
Yeah.
And so it becomes a little misleading when we go, the dollar is strong. Well, yeah, it's strong against the euro, and that's important if I'm going to travel overseas and I've got to buy stuff in euros or whatever country I go to. But when we look at North America, and you look at Canadians using Canadian dollars, and you look at Americans using US dollars and the peso in Mexico, what's important, they don't care what the dollar is in terms of strength in relationship to another currency. That's meaningless. They care about how much it costs for a dozen eggs, a pound of flour, a pound of meat. And the problem that it continues to really be tantamount, and it's the most worrisome item on the agenda for me, is that we talk about dollar strength, but what we should be talking about is dollar strength in terms of buying power.
Gary recalls that $20 could buy a suit a century ago, but today it barely covers coffee for $4 at Starbucks, a stark reminder of lost purchasing power. Despite recent gold corrections, a strong upward trend is expected to resume, with a new bullish wave cycle forming. And with gold nearing record highs, a significant $500 rally is anticipated. The outlook for gold in the coming year remains highly optimistic. Gary exposes currently, the market is neither overbought nor oversold, with indicators sitting around 50, balance between the overbought threshold of 80 and the oversold level of 20. Both technical and fundamental traders are focusing on momentum, which remains strong. On a monthly chart, momentum appears as a near vertical rise starting from October last year, with significant acceleration since February. This strong upward trend is shaping expectations for December and beyond. Now let's dive into the interview.
It's a very scary subject when you realize that a $20 bill now maybe could get you a couple, 4 people a cup of coffee at Starbucks, whereas $20 100 years ago, you could buy a suit.
Absolutely.
Big difference.
Yeah.
And so what I'm saying is I'm looking at how this market moved, so that we had really gains of about 600. We've got to take back at current pricing about 200. And we haven't finished the month. I would say, regardless of where we do conclude this C wave, even if it's down here, absolutely without any question, we will restart the clock. In other words, we will restart the clock by going wave 1, wave 2, wave 3, wave 4, wave 5. Each of those waves, 1, 3, and 5, go to higher pricing. Then you'll get your correction. All things being equal, we've got 1, 2, 3, 4, 5. And this is the highest price gold's ever been. We'll weather this correction. Once that concludes, the bull count restarts, and that's going to pick up $400 or $500. And how many of them do you get in a year? Typically, you get 2 full counts. And so I'm very bullish. I'm not going to give you my exact numbers yet. We'll save that for the outlook. But I'm exceedingly bullish for gold next year. Right now, we are neither overbought nor oversold. Overbought is above 80. Oversold is below 20. And we're sitting at roughly at 50.
Wow.
So we're right in the middle. I can show you other indicators, but for the most part, Jeremy, really what I think technical traders, fundamental traders also are looking at is momentum. Because in the charts we'll look at in a minute, when we look at the year, I'll kind of give you a peek of what I'm looking at for next year, but mostly for December. The momentum has been strong. And incredibly, when you look at a monthly chart, it's just literally a vertical line that starts basically in February. But the rally started, I believe, in October of last year.
Gold's outlook remains strong, driven by central bank policies, geopolitical tensions, and inflation concerns. Despite recent corrections, momentum and technical indicators suggest a continued bullish trend, with expectations of further gains into the new year. As purchasing power continues to decline and the Federal Reserve moves towards lower interest rates, gold's appeal as a safe haven asset grows, reinforcing its potential for significant long-term gains. How do you see rising tariffs impacting gold prices in the short and long term? What factors would make you reconsider a bullish outlook on gold in 2024? We value your thoughts, so please share them in the comments. If you found this content valuable, please give it a thumbs up and remember to subscribe to stay informed. Thank you for being part of this journey with us.